look at in this module 10, group audits. Introduction to group audits. We'll look at group audits, the preliminaries, and we'll go into detail and also consider component audits. Unit 3. We'll look at auditing the consolidation process. So consolidation is a major chunk of your corporate reporting. So you are preparing and here you are auditing it. Then finally we'll look at the auditing, documentation of findings and communication with management and those charged with governance, and we should be done. So we'll run, but then I like you guys always stop me. So you are my breaks. Make sure you let me catch it where you need to interject. Do that very, very free. Okay, so group audit speaks to the audit of groups of companies. We speak to the holding, then the subsidiaries, the sub-subsidiaries, the sub-sub-sub-subsidiaries, related parties based on control, and those that they have significant influence on. So don't forget the group account speaks to control, 51%, and significant influence below that percentage. So key standards looks at IFRS 3, business combination, IFRS 10, IFRS 11, IFRS 12, IFRS 27, the revised one, IFRS 28, IFRS 24, related parties. So all these IFRSs and IASs speak to consolidation, group consolidation, consolidation of financial statements, related parties, and the standards are the accounting standards we are auditing based on group accounts. Very important. So that's a brief introduction to this standard, and it's very essential we understand how to audit it. It's one thing to prepare the financial statements, and it's another thing to be able to audit these financial statements. So the components, looking at the parents and their subsidiaries, the focus is to audit or address issues beyond individual company audits in the consolidated financial statements. And it's very important we look at for possible problems. What could be the problem? Large number of companies. Where you have consolidation of 10, 15 companies, it could be challenging. We have local subsidiaries. We also have foreign subsidiaries where you have to consolidate foreign currencies, different currencies, also accounting practices that are different across regions. So these are the possible problems that could ensue in group audits. So different year ends also for companies that are operating in different countries and jurisdictions, and also consolidation adjustments between those companies could be challenging. So different auditors for components audits could also be a challenge, and the terminology includes group engagement team. So we have a group auditor addresses the group, and for components or subsidiaries we have other firms, individual firms, medium size, small audit firms that address the components or the subsidiaries and associated companies. So these are terminologies we need to be conversant with: the group auditor and the component auditor. The group auditor is responsible for the group audit strategy. He also needs to communicate effectively with the component auditors and looking at the consolidation work, and also forming an opinion on the group financial statements that he's coordinating, forming the strategy, also integrating the work of the component auditors that may be engaged by the same group and not him. It's very important to synergize and make sure their work are not in silos, but at the end of the day, they bring together their work and provide it holistically as a group. So the component auditor is the auditor working on a component, a subsidiary, an associated company, or a subset. And that's at the request of the group engagement team. So a component is an entity or business activity included in the group financial statement. It could be a subsidiary or an associated company, or a sub-subsidiary or a sub-sub-subsidiary, whatever the case may be, whether it's the group wields significant influence or control over that entity. So that's introduction to group as we run through. Any question on the introduction? We understand this from corporate reporting. I don't think we have issues with this terminology. So let's look at preliminaries where we begin to dive deep into it. So the group auditor, based on ISA 600, the group auditor and the component auditor needs to have a relationship, working relationship, so they could understand how the work entails. They are not working in dichotomy or separately in silos. They are to work in synergy, and the group auditor determines the impact of the components auditors' work on the group. So they need to work together to achieve one common objective, and is to express the opinion to ensure that the true and fair view of the group financial statements are reflecting the organization's performance and position as at that time. So the group engagement partner's responsibility is number one, direction, provide a headway, is the lead, also supervise the work of components auditors. Performance of the group audit is resident on his shoulders, and issuing the group auditor's report is also one of the key responsibility of the group auditor, the group engagement partner. Very important. So take note, direction, supervision, performance of the audit is rested on him and not on the component auditors. Also, the issue of the group auditor's report is his responsibility. And the sole responsibility, apart from the general responsibility, there is the sole responsibility which may be seen as specific for the group report, with no reference to component auditors unless legally required. Even then, the responsibility remains with the group auditor, even where by law the component auditors are also required. But solely the group audit, the group auditor is responsible for the entire work. So accepting group auditor appointment is a careful job, or a careful consideration that needs to be considered or provided and thought through before accepting. Separate appointment from parent company audit must ensure that ISA 220 procedures are met in the appointment of auditors. So accepting that group appointment auditor is very important, to sit down and count the cost, understand the entity, so that liabilities will not ensue during or after the work. So separate appointment from the parent company audit and ensuring that these procedures are followed must be ensured by the group auditor. So we must have reasonable expectation of obtaining sufficient, again, appropriate evidence on the consolidation of that group, the parent, and its components, and the component auditor's work also. So obtaining sufficient, appropriate evidence is key. It permeates around all the standards. Whatever you do, make sure you have evidence. Understand the group, understand the job, understand the company, how they work, understand its environment, internal and external, as the group auditor, and the components work also, to obtain sufficient, appropriate evidence so that liabilities will not ensue or be knocking at the door of these auditors. So the significant components, we need to get sufficient, appropriate evidence. Significant components also audited by others, we must get sufficient evidence. Ability to be sufficiently involved in significant component audits by supervising them, we must get appropriate, sufficient evidence for that too. Take note. So inability to be involved in significant component audits may lead to non-acceptance or resignation of the group auditor. So if you cannot get involved in the work and they just provide you with evidence and you have not tested, it may lead to non-acceptance because you can't validate what has been done at the component level. So you may also choose to disclaim, issue a disclaimer of opinion if resignation is not possible. So the onus is on the auditor, the group auditor, to be able to be involved in the component of this work, reviewing their work, checking what they are doing to validate all of their inputs into the group financial statement. So significant components include individually significant material components of the group, subsidiaries that provide a large contribution to the group, globally, locally, or globally. Also likely to include significant risk of material misstatements of the entire group financial statements is an assessment that the group component, the group auditor needs to assess. Very important. Also, understanding the group and the components, and also the component auditors based on ISA 315 is very important and essential. The group auditor must understand from acceptance and continuation stage of the work. So from acceptance, field work, reporting, the group auditor should understand all processes and work performed. Also, understanding the consolidation process of the group and the components is key. Also, management instructions to the components must be understood by the group auditor. Also, the confirmation of revised assessment of significant components. Also, the assessment of the components auditors' ethical requirements, professional competence, skills, and qualification is key also. Also, the group engagements team the ability to be involved in the work must be assessed and understood by the group auditor. So that these are preliminary reviews that the group auditor should assess of the component auditors. Understanding also the regulatory environment and providing oversight across the group, looking at its local and global reach, must also be assessed. We cannot solely rely on the component auditors' work as group auditors without assessment. So the component auditor is not independent or serious concerns exist. We still need, as the group auditors, to obtain evidence without their involvement. So we are reviewing the work and also substantiating whatever work or job outcome the component auditor is providing. So we must provide sufficient, appropriate evidence also, with or without their involvement, and also independent confirmations can be validated from the group auditor. It's like, Julie, you were trying to say something? You wanted to interject?
No.
Oh, okay.
It's raining heavily here.
Oh, fantastic. Wow, it has started raining in Lagos. That's good. Before we see rain here now, maybe till next month or June. I'm not seeing any rain in the sun.
Okay, that's June.
Yes, it's very hot here in the north. Very hot. Okay, so the components. Yeah, it's not in Kano. Very hot. Okay, so the component auditor is not independent or where serious concerns exist. The group auditor should be able to check their evidence without their involvement. The materiality, very important. The entire group materiality and the threshold has been set. So for the group financial statements as a whole, component auditor must set the materiality threshold and also understand during the field work, where to adjust, tweak it up, tweak it down. And also the component materiality may be different from the group materiality. So for components where component auditors perform the work, usually the materiality is lower than the group materiality threshold. So the assessment of this materiality threshold by the group auditors in the individual audits and relying on their work is on the group auditor's assessment and his judgment. Very important. Also, planning and controlling the group audit is resident to the group auditor. Similar principles to individual company audit, but more complex and broader is it's what this job entails. So the planning and controlling of the group audit and also familiarization with the client's consolidation process must be studied and understood. So we need to ascertain the client's timetable for the group financial statements, establish group audit strategy and plan based on the dynamics of the company. We need to look at staffing requirements. What are the staffing needs for the audit? How many staffs need to travel around? How many is needed to validate, to review, for field work, and all that staffing requirements must be ascertained. Timetable for the work, how long should it take for the group and the components? What are the action plans going into field work for problem areas? For example, foreign subsidiaries. What are the action plans to provide adequate coverage? Communication and cooperation with the component auditors needs to be planned at the preliminary stage. So these are the preliminary reviews and jobs that need to be done at the group audits in relation with or in line with ISA 600. Very important. Okay, so we looked at preliminaries. Do we have any questions? And Observations or comments? Any questions for group audits or preliminaries, so that we can jump to the detailed work, the component auditors. Any questions? I guess no. Okay, so let's run. Working with component auditors, that's the group auditors and the component auditors. We need to determine the work of the components individually and as a group. So individual significant job done at the component level must be assessed and determined by the group auditor. The audit using components materiality by the group or the auditor must also be assessed, and it must be significantly assessed due to risk. One or more of the following companies, subsidiaries, associated companies must also be assessed due to risk. The audit using component materiality and the audit of specific account balances, transactions, disclosures, audit procedure, substantial, need to be assessed due to risk and their materiality. So specific audit procedures to address the risk must be performed. So they are non-significant. So analytical procedures at group level for non-significant or non-trivial ones can ensue. So insufficient evidence from non-significant ones may be permitted, but evidence must be obtained. Additional work on non-significant components, varied selection, maybe sampling yearly, can also be performed. Very important. Then communication with the component auditors is necessary for vital, sufficient, appropriate evidence. So communication must be in writing so that you can appropriate. So communication is not just verbal. It must be in writing, it must be clear, timely, and it must be a two-way communication, either via mail and documents being shared as correspondences, as evidence and working papers to validate the job and provide evidence also that will culminate in their report writing. So the group auditor communicates requirements via letter of instruction. So he communicates via a letter of instruction to the component auditors. So the component auditors communicate via memorandum or report to the group auditor. So it can be oral, but it needs to be documented as per ISA 230. So communication can be oral, but then it has to be documented based on either mail correspondence or document correspondence. So if the communication is oral, it should be in writing, just like we have minutes of meetings taken. So whatever communication is done verbally should be documented. Component auditors provide access to relevant audit documentation unless legally prohibited. And that's important because any documentation must be in writing. And the component auditor should provide that to the group. And the group auditor's letter of instruction includes the work required. Letter of instruction, which is their evidence of communication to the component auditors, the use of that work. So the work that is required and what they need the work to be used for. The form and content of communication from oral to written, and their request in the letter of instruction for cooperation, it must be documented. Ethical requirements needed by the group and the component auditors, and also the component's materiality must be in writing. And identified significant risks must also be documented. Also, list of unknown related parties at the component level must be also documented. And we have the component auditor's report of work performed. His report of work performed includes compliance with ethical and group auditors' requirements, identification of financial information he needs to report based on the request or the instruction by the group auditor. Non-compliance with laws regulations leading to material misstatement must be communicated. Also, issues around incorrect misstatements, a list of them, material or immaterial, indicators of possible management bias at the component level should be reported to the group auditors also. Identified material weaknesses in internal controls at the components should be reported also in writing to the group audits. Other significant matters communicated to components, governance, those charged with management at the component level. Other relevant matters for the group audits consolidation should be communicated to the group auditor by the component auditor. So the component auditor's overall findings, his conclusions, and opinions issued should be disseminated to the group auditor. So the involvement of the group auditors in the component auditor's work, the group auditor decides the work to be performed, the direction, remember we spoke about the direction and supervision of the job, the component auditor. So for significance, the component's minimum requirements or areas to report includes discussion of discussing the business activities significance to the group, the component management auditor. Very important. So the business activities centering around what they do, it may be different from the general group looking at the industry or the sector where they are domiciled. The activities need to be communicated to the group audits. Discussion of risk of material misstatements with the component auditor is very necessary, and also review of the component auditor's documentation of significant risk is also of great importance. So these areas must be carefully done by the group, the component auditors, and reported to the group auditors. So significant risks at component levels and also the evaluation of further audit procedures in relation to the components needs to be substantiated and reported to the group auditors. We also need to consider the need for involvement in meetings, review strategy plan, risk assessments, further procedures, participation in meetings, reviewing documentation, and every internal proceedings during the job of component auditors with management. We need to consider involvement to understand the business internally and also the external environment of the business. This is key when the group auditors are working with component auditors. So other components include involvement, and it depends on the understanding of the components auditor's competence and local regulation. So all cases needs to be evaluated, especially looking at the component auditor's report. If the cases or the component auditor's report are insufficient, the group auditors should determine necessary additional procedures by the component auditor or the group auditor to be performed. And where we have joint audits where two or more firms are appointed for a single audit opinion, then we need to, the common group accounts, understand how the joint auditors will work, but there should be a lead by the group auditor. This is very important. So it's common in group audit, for example, where you have post-acquisition, mandatory in some countries, and also distinct from shared audit. That is single firm signing an audit of financial statements. The advantages of joint audits is that they cover large clients and it aids post-acquisition transition. They help coverage very seamlessly, and higher technical expertise, improve geographical coverage are advantages of joint audits. The potential to challenge Big Four governance also helps in joint audits where medium size, one or two medium size come together to perform an audit job. This is very key. But one of the disadvantages is extra cost, high cost. Of course, there's a cost for quality. If you bring in two big or medium sized audit firms, there's a cost attached to two than one audit firm performing that same job. Also, inconsistencies in methods based on two different companies coming together as audit firm to carry out their job. Difficulty in dividing the work is also a challenge. Also, challenges in monitoring, potential for poor collaboration, difficulty in liability claims, also higher overall costs are all demerits of joint audits. But you can't underplay the advantages. They may outweigh the disadvantage. So performing joint audits, the general objective is, or the key is to communicate very well, plan very well. Regular discussions with both auditors with full documentation should be ensured, and performing joint audits will go seamlessly. So we need to consider the independence and competencies of each firm, and I believe the board will have done that during the selection process. Agree on the joint strategy and work coordination to make the work move seamlessly. Also, to avoid minimization of duplication of efforts, where two auditors or the both firms are doing the same reviews, they may waste time and they are doing the same thing, but segregation of duties should be ensured by proper planning. Also, agreement on the work allocation, review each other's work, and address differences in opinion. Peer reviews and joint audits actually promote peer reviews very well to enhance and ensure that differences in opinion are settled. Very important. Okay, so that's working with component auditors. Now let's look at auditing the consolidation process proper. So the role of the group auditor is to understand the consolidation process. That's his primary role. And also management instructions based on ISA 600, and also to assess risk. So understanding the consolidation process is key, how management consolidates the components and the subsidiaries. This is key. We need to confirm client actions, accurate transfer of information, appropriate consolidation adjustments should be understood and reviewed by the group auditor. What are the extent of procedures performed? And this depends on the group auditor's risk assessment. Very important. So the main audit procedures of groups includes clerical accuracy of postings, transactions. We need to verify the accurate transfer of figures and arithmetical accuracy of these calculations in the financials, in the group consolidations. This must be reviewed and tested. So clerical accuracy is key as one of the main audit procedure. Number two, status of investments in those subsidiaries. What are their influences? What is the significant influence or control? We need to understand the status. Clarification of subsidiaries, that's where you have control. Associates, you have significant influence. Joint ventures, significant influence. Investments, and appropriate accounting treatment for these statuses. So the group auditor needs to understand these intricacies. And for the changes in the group, the acquisitions, we need to confirm fair values, the goodwill calculations based on IFRS 3, the treatment of deferred and contingent considerations, as we do in group accounts in CR. Also look at disposals, confirmation of sales proceeds, gain or loss on sales. The calculations around this are very important. We also need to look at other changes, current accounting treatment in consolidation statements, pre-consolidation, pre-acquisition, post-acquisition profit. All the arithmetical accuracies needs to be tested by the group auditor. Also consolidation adjustments that speaks to intercompany transfers and balances. We need to confirm intercompany balances, unrealized profit calculations. Also need to check non-controlling interest, very important. These calculations and their disclosures are key for consolidating these companies. We also need to check for intercompany and other dividends, loss-making investments, and how they impact the financial statements. We need to consider goodwill impairment, the need for parent company write-down. Also going concern of the subsidiary is very, very important. Also request for comfort and the support letter, if the group provides financial support, should also be to reviewed. Related party transactions, we must ensure they are in compliance with ISS 24, and material risk around related party transactions must be assessed. Most group components are related parties, so we need to assess the risk around this company. And also reporting, we need to conclude on the true and fair view of the group, the entire group's financial statements, and the group audit reports principles will be looked at in the reporting session in chapter 14 or so, when we look at reporting. So subsequent events also needs to be taken into cognizance. Review procedures to identify component events between component financial confirmation date, group audit report date, and the performance of the group, margin of the group, and component auditors report is very essential. So that speaks to the consolidation process and working with the component auditors to facilitate the reporting and ensure that they are in synergy and everything works seamlessly. Okay, so we've looked at the auditing the consolidation process. Finally, let's look at issues that come up with documentation, communication, and communication with management and those charged with governance, and that will be it for Unit 5. So documentation is very important, and beyond ISA 230, the analysis of components, identifying significant ones, is key. So the type of work performed on component financial information will determine the extent of the group auditor's involvement in significant components work. So we are looking at the type of work performed on the component financial information, and also analyzing these components in identifying significant ones is also key. So written communication between the group and the component auditors cannot be overemphasized. So written communication is key. Whatever transpires as correspondence between both auditors, group and component, it must be in writing. Take note of that. Documentation must be in writing. Also, communication with the group's management on a timely basis as issues arise must also be documented. Areas of issues like material weakness in the group's enterprise-wide controls, the material weakness at components level significant to the group needs to be identified by the group or by the component auditors and integrated in as a whole and provided to management to respond and address them. Any fraud, suspicion of fraud by the group or the component auditors needs to be communicated to those charged with governance, and this should be beyond ISA 260. So the type of work on component financial information, the group auditors planned involvement in the components auditors work needs to be assessed. Any concerns over component auditors work quality needs also to be addressed by the group auditor. This is very important. Also, the limitation on the group audit, for example, lack of access to information or staff, needs to also be addressed. Any fraud or suspected fraud involving the management of the group or the components and employees with significant role in the group's wide controls that may result in material misstatements need to also be assessed. And these are limitations within the audit of groups, and it needs to be addressed very, very importantly and brought to the notice of management, the board, and those charged with governance. This is very, very important. So by review of the chapter, we provided a foundational context to group audits based on ISA 600 and the standards from Unit 1 to 3, and the key concepts of group audits and the interaction between group auditors and component auditors, the consolidation process, communication in writing, which is very, very central to these discussions. And this has been communicated in the study text, and generally this is a guide in summary on how to perform group audits. So the examiner tests questions around these areas very, very consistently, because group audits is a central area of the AAA program or the AAA paper, and it's very important to take note of that in our mock exams and practice questions on how to attack or address questions in relation to this. So we'll be able to summarize the core competence, the components and considerations of group audits. We've also described how group auditors are used and how they synergize with the group auditors, how they communicate, and they will partake. And also, we also partook and explain the responsibilities and tasks involved in performing a group audit. Also, compliance with ISA 600, including planning, performing, reporting, and general work entailed in group audits, we've explained in this short time. So we also looked at joint audits and how joint auditors from different firms would be brought together to perform the work. Also, the benefits and the drawbacks of joint audits. We've also seen that. We also discussed the practical considerations when undertaking joint audits. So by way of review of the chapter, these are some thoughts on what we think group audits are all about. And in your revision, you may need to look at it, because we will definitely test group audits in 1 or 2 questions or sub-questions. So please take note of that. Okay. So if we don't have any question, I think we should quickly run through our quiz. I still have A and G on the call. Any questions so that we can run through our quiz? It's already 10:10 p.m. Okay. So please validate you are still awake by saying hi. A and J, please validate you are still awake.
Oh, so it's in and out. My network has been bad.
I noticed it.
Can you hear me?
Yes, I can hear you.
Can you hear me?
Yes, I can hear you. I noticed you've been off and on. The network has been very bad. Sorry about that. I think she's off again. Aisha, can you hear me? Hello, Aisha. Are you there? Aisha, you're muted if you're speaking.
Yes, I'm here.
I think your network is a bit better. Julie's network has been challenging today.
No.
I think she's even off now. Okay, so let's run through our quiz questions. As she comes in, she'll join us for groups. Okay, so let's go. Number 1, what is the preferred treatment of goodwill arising on consolidation under IFRS? I believe CR should be able to know this one. So number 1, write-off against reserves. Preferable treatment. B, capitalize and test for impairment when impairment indicates or indications arise. C, carry on the balance sheet indefinitely. D, capitalize and test for impairment annually. What is the preferred treatment for goodwill arising on consolidation under IFRS? Okay, capitalize and test for impairment annually. Final answer.
Yes.
D. Sound sure? We'll see. Number 2, which of the following statements is correct? Come again. Responsibility for a group audit is shared by group auditor and any component auditors. B, any audit firm may accept an engagement as group auditor, even if it's insufficiently involved in the audit of significant components to obtain audit evidence about them. C, a group auditor may rely on the work done by a competent auditor without the need to assess its quality. D, the group auditor sets the group materiality level for the financial statements as a whole and the component materiality levels for the components audited by component auditors. So which of the following statement is correct? Correct. So make your pick.
Good. I think I was trying to stay awake during this lecture. Okay.
Understand you're usually quiet. You need to go back to the video again.
I need to go back to the video. I really don't know the answer.
You may have to guess something. Which of the following statements is correct? Responsibility for a group audit is shared by the auditor and any component auditors.
I'll go with A.
Yeah. D and A. All right. Number 3, which of the following statements about the group engagement partner in a group audit is incorrect? The group engagement auditor is responsible for the opinion of the group financial statement as a whole. The group engagement auditor can demand information and explanation from the component auditor. The group engagement auditor needs to consider the materiality of the portion of the group audited by him. The group engagement auditor can demand coterminous year-end for all group companies. Which of the following about the group engagement partner in the group audit is not correct?
Is not correct, right?
Exactly. It's incorrect.
I do not know this coterminous, but I think C seems to be the answer.
Okay, you're making your pick as C. All right.
So that
Okay, we'll see. Oh, she wants to change her mind. All right.
No.
So you're still sticking with C.
Yes.
Yeah. Let's see. Number 4. Which of the following statements is correct? I like these questions. They'll make you do giveaway by force. A competent auditor. A competent auditor should provide the group auditor with access to its relevant auditing documents. B, a competent auditor should provide the group auditor with a report of work performed unless the group auditor specifically states that it's not necessary. C, when there is a joint audit, one of the firms must act as the senior firm in the audit. D, when a component within a group is significant, the audit of the component should use group materiality. Which of the following statements is correct? The component auditor should
work together. Component auditor and the group auditor.
Okay, so what's your pick? So what are you picking? So the following statement is correct.
I think B.
Component auditor should provide the group auditor with a report of work performed unless the group auditor specifically states this is not necessary. Okay, you are going with B. We'll see.
No, I'm not sure, but yeah.
I'm not sure you guessed. All right, number 5.
But they're supposed to work. Okay, well, you can't tell me the answer now.
No, I'm the examiner, so. Number 5, in a group audit, they've come up with this 1, 2, 3. That's good. In a group audit, which of the following should be included in the main audit procedure in relation to the consolidation process? 1, clerical accuracy. Consolidation adjustments. Number 3, status of investments. In a group audit, which of the following should be included in the main audit procedures in relation to the consolidation process? Clerical accuracy, consolidation adjustments, status of investments. A, 1 and 2. B, 1 and 3. C, 2 and 3. D, 1, 2 and 3.
2 and 3. C.
Final answer.
Yes.
Okay. Let's go to judgment D. Number 1, D, and she got it. Under IFRS 3, you were so certain about that one. Goodwill arising of consolidation.
Myself.
Have you passed CR or you're writing CR?
I've passed CR.
No wonder. A bad job. Under IFRS 3, goodwill arising on consolidation, purchased goodwill should be capitalized in the consolidated statement of financial position and tested annually for impairment. Exactly. So let's go to the question. What is the preferred treatment of goodwill arising on consolidation under IFRS? Capitalize and test for impairment annually. Correct. Okay. So number 2. Number 1 is D, number 2 is D. Okay, you decided to do giveaway. You chose A, so the answer is D. Okay, let's look at the question. The answer is D. Which of the following statement is correct? The group auditor sets the group materiality level for the financial statement as a whole, and component materiality levels for components audited by component auditors. Exactly. So A is incorrect.
So anyone related to this, I filled it then. Okay.
Exactly. So A, responsibility for the group audit is shared by the group auditor and any component auditors. No, the group auditor sets the group and he's the one that provides direction, supervision. Remember, we said that in the lecture. He's the one that directs and supervises and determines materiality. So take note of that.
Okay. I thought they do work together.
No. He provides, the group auditor provides direction. Component auditors report to him, so to say.
Okay.
Yeah. Okay, so number 3 is D. You just C. Okay?
Yeah. Anything related to that, I filled it.
Okay, so which of the following statements about the group engagement partner in a group audit is incorrect? So number D is that the group engagement auditor can determine coterminous. Coterminous means extend the audit beyond year end. So you can't do that. You can't extend it. You can't extend
I do always say that if any grammar you do not understand, that's the answer.
And you said it, you were saying C or D, but then you just picked C. So the group engagement auditor needs to consider materiality of the portion of the group audited by him is correct. Exactly. So D is incorrect. You cannot extend the date. All right. So let's see number 4. A, another giveaway for me.
I only have one.
You did give away very well for me today. Number 4, which of the following statements is correct?
I
You
was
chose B.
sleeping. I was really dozing.
You were tired, exactly.
Honestly.
So number 4 is A. A component auditor should provide the group auditor with access to its relevant auditing documentation. Exactly. And you chose B. A component auditor should provide the group auditor with a report of work performed unless the group auditor specifically states that this is not necessary. It's not possible. So
I was thinking they do work together.
Okay, even if they work together, they have to still provide the report because the group audit is not in silos, they work in synergy.
Synergy, okay.
So
the right answer is A, right?
Yes, the component auditor should provide the group with access to relevant auditing documentation. Network is not allowing Julie to be stable. And finally, number 5. In the group, let's look at the answer. And the answer is D. You really did give away from me today. There should be a check that the client has made the...
Definitely check this video again, like tomorrow.
So number 5 is D. It's 1, 2, 3. So I think you slept off in that place where I spoke to clerical accuracy, consolidation adjustments, and status of investment. So that is it. So Julie is back. Julie, can you hear us now?